Today first of all, let me introduce myself. My name is Hakeem Singleton from Singleton Mortgage Group. I'm so excited, pleased that you guys have chosen to spend the next hour with us on a busy Wednesday evening. The COVID pandemic and things are starting to ease, and you can go get something to eat and sit outside, and it's a beautiful night, but you chose to be here with us, so thank you. Tonight we're going to talk about credit. We're going to talk about credit. We have the man you need to talk to assist with that credit piece. His name is Ramsey Coulter of Culture Credit. Ramsey and I have been partnering, for the better part of 5.5 years. Yeah. He has helped hundreds of clients of mine. He has helped thousands of clients of his own, and he is here to impart some excellent knowledge for you guys. The first piece of information that he is going to cover is how to get a credit score. Okay, we're going to talk about how to get a credit score, why that credit score matters, and what ties into it. The second piece we're going to discuss is the credit score scale. We're going to discuss the scale and what that
because her mother didn't say
Here we go. What that means to your credit report and how to more deeply understand the numbers. We're going to talk about credit utilization, what that looks like. What's a good use to limit ratio, right? We're going to talk about utilization and what that means to your credit score. Then we're also going to talk about overextension. We're going to talk about what happens when you get that credit card and you decide you want to go shopping and you spend more than you really can afford, and the bill comes next month. What do you do? We also have him besides Ramsey Coulter, another awesome partner of mine, Angela Weber. Angela and I have also been working together for the better part of 5 years. Angela has helped dozens of clients of mine, hundreds, if not thousands of clients of her own. She is a realtor extraordinaire. She annually invites me to teach her classes, and so tonight I am honored to have Angela here to assist you guys tonight. So if you have any real estate related questions, Angela will be the voice of reason tonight. So you know who I am, you know who Ramsey is, you know who Angela is. Hannah, say hello. Hannah is here to kind of administrate the process. If you have any questions, please type your questions on the side in the chat box. Hannah will table those questions until the end of the course. And Ramsey will then spitfire those questions and get them answered for you, all right? Thank you so much. Without further ado, I'm going to pass the mic to Ramsey.
All right. Thanks so much for having this tonight, Hakeem. It's a lot different scenario and situation than we're used to doing live events and stuff, but you gotta do what you gotta do, so during the COVID, not being able to meet with you guys face to face is totally different, but that's all right. We're still gonna provide the same great knowledge and information, and we're still gonna be able to answer any questions that you guys have regarding credit, buying a house, getting a mortgage, and how that whole process works. So first thing would be, the first question was Hakeem, it was how is a credit score calculated, or how many points is a credit score? Was that the first question? Oh, hold on. Did I lose you, Hakeem?
No, you didn't lose me. The first question is how to get a credit score.
Okay, so how to get a credit score. So in order to get a credit score, you have to have credit. And so the question might be, well, what is credit? I pay my electric bill, I pay my cell phone bill, I pay my car insurance bill, I pay my rent every single month, and that doesn't help me, for the most part, get a credit score or a FICO credit score. And so you have to have credit accounts that report to all three credit bureaus, or at least the most of them. So TransUnion, Equifax, and Experian are the major three credit bureaus, and you have to have positive accounts that are reporting to those credit bureaus. And so not just negative accounts, right? So like if you don't pay any of those bills that I first had mentioned, electric, cable, internet, TV, cell phone, car insurance, rent, if you don't pay those, they will report negatively to the credit bureaus, but normally they won't report positively. There are certain companies out there like Rent Reporters or Rental Karma that do report rental payment histories nowadays. They usually do not report to all 3 credit bureaus. And so if you're getting a mortgage, you
I just want to make it clear, we're not holding on to the hold on to. I wanted.
Is there a question? I'm sorry. No? Okay. Sorry. I got confused. So having positive credit accounts like a credit card, a secured credit card, a credit builder loan, a student loan, if you went to school, a car loan, anything that is positive. Now, it can't be a buy here, pay here dealership. It has to be a big time bank, Capital One, Santander, Credit Acceptance, GM Financial, Toyota, any of those that report to all 3 credit bureaus is how you can generate a FICO mortgage score. And you have to have one account for 6 months. That is how you get a FICO mortgage credit scores, by having open positive credit for 6 months. That's the answer of how do I create or generate a FICO mortgage score, not a Credit Karma score that will give you a score as soon as you are alive. So that's the first question.
That's an excellent answer, and I'm going to interject a little bit. We talked about how to get a score. Now that we have the score, and you have a credit report, and you have established credit, let's talk about the credit score scale.
Yeah.
What does that consist of?
So normally a credit score scale is from a 300 to an 850. That can change. That does change. That depends on what scoring model you're looking at. So nowadays, Credit Karma's finally caught up, and they use the same scoring model. I'm sorry, not the same model. It's a completely different model, but they use the same score range. They actually had to sue FICO and take them to court to get permission to use their 300 to 850 credit score range, because they said it was trademarked, and FICO lost because you can't trademark numbers. But anyway, so Credit Karma does show a 300 to an 850, but they will give you a score very quickly. As soon as you have a positive or a negative, they will generate a score, which is not true for when you're getting a mortgage. And so for FICO, generally speaking, right? And so people don't understand, FICO, they get billions of dollars a year by creating and selling FICO scores. So they create new FICO scores all the time, because there's got to be a reason why some dude's there making $100,000 when, his job is to generate new FICO scores. And so that's their job. That's what they do. They pay tons of mathematicians to come up with all these numbers. And so that's what they have to do. And so there are tons and tons of different FICO scores. There's over 60 FICO scores. And so there are mortgage scores. There's a bunch of them. There are auto industry scores. There's over 10 of them. There's credit card scores. There's over 9 of those. There's personal loan scores. There's student loan scores. There's scores for everything with FICO. And so just because you have one credit card that shows a FICO score, it's probably a credit card score. Like, so Discover, I have Discover, they show me my TransUnion FICO 8 credit card score, but it's not a mortgage score. It's not the score that Hakeem would pull if I applied today. It's still a FICO score, and it's closer probably than Credit Karma, but it's not the exact score. So you got to understand scores, and that there's tons of scores. To answer that question, I guess. What was the full question? I got a little sidetracked.
So the full question is really just talking about the credit score scale.
Okay.
How much of it? Let me be devil's advocate here, and let's say I opened the credit card, and I think I have a score. How much does the credit card utilization play into my credit score?
Right.
How
Yeah.
much does loans play into my credit score?
Sure. So that's super important, right? So there are the generic FICO 5. the FICO 5. What are the 5 categories that create a FICO credit score? And these numbers might be a little different. They are absolutely a little different for mortgages and for car loans and for credit cards, but generically speaking, the information that they release to the public and to people who pay to go to events is the FICO 5. And so 35% of your credit score, the most important factor is payment history. Number one, payment history. Paying your bills on time is the most important thing. But credit utilization is number 2. And so the question was, how many points does your credit usage or credit utilization play into your FICO scores? And the answer is 165 points on average. It could be anywhere from 140 to 170, but now we're getting super technical, so I don't want to confuse people. But credit utilization, do I have a credit card? If no, you are losing a lot of points. Over 100 points you're losing just because you don't have a credit card. So get one. Even if you never use it, get one. Just having one open, you're getting 50, 60, 70 points just by having a credit card open, okay? Even if you just pay the annual fee and that's it. So it's a lot. 165 points is, do I have a credit card and how much do I owe compared to how much the limit is? So if the limit's $300 and I owe $100, that's not too bad. That's about 33%. That's, the general rule is 30%, below 30%. So a $300 credit card, you want to keep it below 100. I tell people keep it below $30, below 10%. When you're getting a mortgage, you want the most points as possible. And 0, you actually lose points. If your balance is, and again, I'm getting super technical, but if your balance is 0, you lose points. It's not many. It could be 5, it could be 10, it could be 6, it could be 8. But if you're on the border and you need a couple of points, use $10. And I mean like only $10 or 15. Don't use too many to get a couple extra points. And that's something that Hakeem would tell you guys is, hey, we just ran a score simulator and it says that you can get an extra 8 points by spending $10 because you're at 0 balance. Hold on, I think there was a question.
We're gonna hold that to the end, Ramsey.
Okay, sure, no problem.
We'll answer it. We'll get to your questions to the end, at the end. I just want to make sure everyone has a forum and knows that you do have a space to drop your questions.
Perfect. I think I answered the question pretty well, though. Was there more to that question? Yeah.
No.
Go ahead, Najee. I'm sorry.
I just came in. I'm sorry. I was taking a test, but I was sorry. I just was asking because I know me personally, I only have one credit card, so I wasn't sure what else you had spoke on. So I was trying to see if it was.
Sure. So having one credit card is a great start as long as the balance is super low. So let's say that the credit limit is 300, keep it below 75 at all times if possible. But if you, depending on your time frame and when you wanted to buy another house, it might be a good idea to get another credit card now. It also might not be. It depends on how quickly you wanted to get a pre-approval. And if you were questionable, you reach out to Hakeem and he can take a look and see if you're ready. And if not, then we can advise to open up more credit. But you gotta be careful when you're getting close to getting ready to apply. You don't want new credit unless you absolutely need it. Unless you have no credit, then you need new credit.
All right, so I'm gonna throw a curveball. This is kind of off topic, and I've seen it a lot on social media, especially with everything going on. Everyone says that cash is king. Cash, right?
Right. Cash is king, but credit is the queen, and we all know who runs the houses around here. I mean, that's just my opinion. Yes, cash makes the major decisions, and you need cash to make big moves, that's for sure. You need cash to buy a house, that's for sure. But you also need to have a decent credit score or a good or great credit score. And right now, with interest rates being amazing, you want a great credit score more than ever because rates are unbelievable. And who knows how long they'll stay this long. Maybe Hakeem can answer that. I don't know. But they are great. And just because I got a 610 or 620 credit score and I can get a 5% interest rate, well, right now that's really bad. 2 years ago, that was perfect. That was exactly what mortgage scores were. But right now, a 5%, if you're getting a 5% or 4.5, whatever, man, you shouldn't be. You shouldn't be right now. So you want to work on that credit. You want to have a 660, 680, 700 plus to put yourself in a great position so you never have to refinance. And Hakeem doesn't want me to say that because, you know, I mean, he wants to help you throughout the whole process. He wants to help you buy multiple investment properties and stuff. But, you know, I mean, getting a great rate is worth it.
Absolutely, absolutely. Now we talked about credit utilization. We talked about the credit score scale. We've talked about how to get a credit score. Let's talk about building at this point. You know, most people start with a 600, 620, 640. Let's talk about the next step. Let's talk about growth. Let's talk about what it looks like going forward.
Yep. So when you have credit, right? So let's just say you went to college and you have 1 or 2 or 3 or 4 or 10 student loans. You have student loans and that's it. You don't have any credit cards. You don't have a good mix of credit. Credit cards are the most important thing to have. It's the only thing that has the word credit in it. So remember that. Credit, what? It's not a credit loan. It's not a credit student loan. It's a credit card. Credit card is the most important thing for having a good and strong credit score. And like I said earlier, even if you don't use that credit card, which I'm not recommending that you just open a credit card and never use it, but if you do that, you are still going to see significant increases in your credit score by having an open, positive credit card that even if you don't use it, it reports positive every month. It still reports on-time payment history. It still reports positive payment history, and it still has open credit utilization. And so even if it's a $200 secured card and you owe 0, while I said earlier that you might not get the most points, you're still getting a lot of points and more than somebody who has no open credit or no open credit card. So mix of credit is a good thing. Now, I do not agree, and I do not like those commercials. Buy a car, improve your credit. I don't like them. I don't like them at all. You should not buy a car just to have a good credit score. That's not true. Any loan is a mix of credit. Okay, so a personal loan, a student loan, a car loan, a secured loan where you give the bank $300 and they give you a loan, that is mix of credit. A mortgage is a completely different category because that normally is the holy grail of credit. You normally want to get a mortgage. That's why you have credit. So mix of credit is important. Having at least 1 or 2 credit cards and one type of loan, not just getting a car loan just to build credit though. We don't want you to do that. That hurts your debt to income. It hurts how much you get approved for. And it's going to be a bad interest rate because you don't have much credit. So you're going to be paying $400, $500, $600 for something that's not worth that. So that's for building credit. Have at least look, if you're reserved, just have 1 credit card. We're okay with that. Have 1 credit card and 1 little loan. That's okay. But on average, you should have 2 or 3 open credit cards for at least 6 months and some type of loan. And that's a good number to have. Not too many more. Okay. You don't want to have 10 or 15 credit cards. That's dangerous and that's stupid. And you're going to get in trouble. All right. And you're going to have a shopping problem. So you don't need that many, but 2 or 3 and 1 type of loan. And you don't have to keep getting a new loan. Just 1 loan that you opened 6 years ago and paid off is still a good mix of credit.
That's good advice, man. That's good advice. Now we're gonna reverse. We're gonna change course for a second. Hold on 1 second for me.
Sure.
So we're going to change course for a second, and we're going to discuss at this point in time someone who has had credit, and maybe made some poor decisions. Maybe they made some bad decisions along the way, and they got themselves into a little bit of a pickle because they overextended themselves. What options and what choices do they have? How can you assist with that process?
Yeah, sure. So first thing is we always offer a free consultation. So we'll take a look. We're not Lexington Law. We don't just sign up anybody who calls us. We want to help you, especially if you're referred by Angela or Hakeem. We want to get you back to them as soon as possible. That doesn't mean tomorrow, and that doesn't mean next week normally, okay? It's going to take time in some cases, but if there's nothing that we can do to help you, we're going to let you know that. And we're going to say, hey, you have no credit. I can't open credit for you. Go open a credit card. And here's a link. Go open up a credit card or a credit builder account. But if somebody has had negatives in the past, you got to be careful because paying negative accounts is not always the best thing. You might think it's the best thing to do. You might say, well, I remember real conversation just yesterday, a lady said, well, look, I remember I had plastic surgery and I owe that care credit card. I know I do. And I said, well, yeah, but you don't need to pay that full amount. First of all, we can fight it. Okay. And if they can't prove it, they got to remove it. Or second of all, we can settle it for less. Usually, not always. It depends on who the company is, but we can settle it for a lot less. This case, it was $4,500 and she wanted to just call them and pay them $4,500. Most of my clients don't just have that kind of money sitting around to just call and pay someone $4,500 because I know I owe them. I said, well, what about paying them $1,500 instead and saving $3,000 and using that to buy a house? And she said, well, that would be great. I said, yeah, so why? So just relax and let us do our job. Let us call them on your behalf and see if they're willing to take less, which they usually will, and delete from your credit. That's the most important part. And there is, so I'm hitting two things here. There is a question that talks about negative, how important is it to pay off negative accounts on your credit? And the answer is it depends. It depends on if they agree to delete it from your credit. It also depends on what type of account it is. The most important part of that is, did they sue you? Because if they sued you, you have to pay it. If they sued you, you have a court judgment. And even though that doesn't show up on your credit, and some people might not know that, court judgments currently do not report to personal credit bureaus. But when you apply for a mortgage, they do a title search or they do a LexisNexis search where they check the public records and they will see if you owe tax liens or if somebody's ever sued you, whether that's a landlord or a credit card company or just somebody that mowed your lawn that you didn't pay or something that's happened. They're little liens, they're minor liens, but any lien is a problem when you go to buy a house. So you got to be careful with that. So
Absolutely. So just to recap, I want to recap because you hit a lot of really hot topics and a lot of good talking points. First, we talked about how to get a credit score, how to build credit. We talked about how to maintain it, right? We talked about what the credit score scale is and what it consists of. We talked about credit score utilization. We talked about cash versus credit. And now we've talked about, okay, I made some mistakes, life happened, because there's no shame in it. Life happens to us all. And we've all had hit bumps and bruises and skinned our knees along the way, and there's no shame in it. The quote the Rocky movie, right? It's not about how many times you get knocked down. It's about how many times you keep getting back up. And that's what this class is about. This class is about, getting up and staying up. And this series is about getting up and staying up. So the next question I'm gonna ask you, Ramsey, I want you to kind of elaborate on it, and then it's kind of going to segue into next week's course or the 2 weeks from now's course. What happens? What are my choices when I've gotten myself into too much credit card debt? What can we do to get ourselves out of credit card debt? What can we do to manage and maintain our life? Because credit card debt can be crippling. So what options do we have with the credit card companies?
Sure. So That's a hard one. When someone has dug themselves into a lot of credit card debt, and a lot is a relative term. For some people, a lot's $1,000, but I've seen $10,000. I've seen $50,000. I've seen people with $100,000 in credit card debt, and it just hurts me. It's so disheartening, and to give good advice is hard in that situation, because I mean, the best advice is stop. Stop using credit cards. I don't care if you cut your credit cards up. Do not call them and cancel them, but cut them up so that you can't physically use them. If you really have that big of a problem, then yes, please call them and cancel. But closing a credit card is never good for your credit score. So I just got to throw that in there. But if you have a big problem with whatever store, calling, just cancel the stinking card. Okay. There are options. There is, so credit counseling. So we are credit repair, which is different than credit counseling. Credit counseling is the only alternative that doesn't hurt your credit. So debt settlement is where you see Freedom Debt Relief and those commercials on TV all the time that say, call us and you can pay a third of your credit card bill. Well, yeah, you can also just stop paying it and it's going to destroy your credit. And that's what they do. They tell you to, debt settlement tells you to stop paying your credit cards. You then pay the Freedom Debt Relief or debt settlement company $300 a month instead of $800 a month that you should be paying your credit cards. And 6 months later, they charge off. They're negative. They destroy your credit because all of your accounts are not paid. And if you're not trying to buy a house for the next couple of years, well, okay, it's better than bankruptcy in some cases. But you can be sued if you don't finish the program, which takes 2 or 3 years. These companies can sue you. American Express, Discover, they sue people all the time. Just Capital One, certain companies just sue people a lot. But right now they can't. But that's about to be over soon because of COVID. But anyway, so you got to be careful with debt settlement. Any company that says you don't have to pay your credit cards, the question is, are you paying my credit cards? And so credit counseling, real credit counseling, there are, every county has credit counseling that they offer. There's also nonprofit, they're all nonprofit organizations. So if you are not sure if it's credit counseling or debt settlement, ask them, are you a nonprofit or are you a for-profit? If you ask me, we are a for-profit, we are credit repair. That's different than credit counseling. Credit counseling is a nonprofit. And so those types of companies, they can sometimes negotiate your credit card interest rate. It does not negatively affect your credit score. And if you don't use your credit cards and stop getting more credit cards, you can come up with, they help you with whether they call it a debt elimination plan or just get out of debt plan. Those are good things. That's the only good option for saving your credit score is credit counseling. It does notate on your credit, managed by credit counseling, but that note doesn't hurt your credit as far as Hakeem is concerned. That note will alert other lenders. So if you go apply for new credit cards, they're gonna be like, no, you can't, you can't manage your credit card. You're in credit counseling, so we're not going to give you a credit card. It's a red flag to them, but it doesn't negatively hurt your credit. So credit counseling is the best and only option other than just stop using credit cards. And pay them off.
So, Dawn, that's a good question. We're going to hold that question for one moment. I'm going to let Ramsey answer that. So just to kind of summarize that last piece, that budget piece is so important, and that's the reason we're doing this series, is to teach people and to educate people that there are options and there are ways to avoid the pitfalls that so many of us have fell in prior to you. We've all gone this way, and we've all lived life, and we've all made mistakes. But it's important to know your options, to know what you have available to you, to know that sometimes even credit card companies themselves, if you reach out to them and tell them that you're having issues with your credit, you're at your credit, you're making your payments. If you're having issues making your payments, they will in fact quietly close the card on your credit report. It won't hurt your score, and allow you to make supplemental payments until you get back on your feet. It'll cut the interest to zero if they close the card, or near zero to keep the card open. Maybe a year grace period to get yourself together. Those options are available. We're going to discuss that and so much more next week on how to budget and prepare for home ownership, how to budget for life, how to budget to do better. My grandmother always used to say, when you know better, you do better. And so we're going to help you to know better so that you can do better and that you can leave better for your children, for your grandchildren. This class is about building legacy, and legacy you will have. Thank you so much for attending. And now I'm going to open this up for questions. We're going to start with the last one from Dawn. Is it legal or disputable for debt collectors to constantly report to credit agencies, making the debt look newer than what it is?
Sure. So no, the answer is no. It's not legal for a debt collector to report your account every single month, which would in turn report a new collection every month, which would hurt your credit score. That's not legal. It is absolutely disputable because it's not legal. Anything that's inaccurate, incorrect, not 100% accurate is disputable on your credit. Now, that doesn't mean it's just going to fall off. Also, it depends, how do you know that info? So I get that all the time. And the answer is, well, Credit Karma said that there's a brand new collection, but this collection's been on my credit for 3 years. Well, the thing is that Credit Karma doesn't matter. That's the thing that it is. You know, Credit Karma gives alerts all the time that are not accurate. And they'll say, so if you're working with a credit repair company or disputing something on your own, every single time you dispute it, it will update on Credit Karma. Now, they are updating the date of last reported, not the date of last activity. There's a huge difference between date reported and date of activity, because the date of last activity is the last time a payment was made on the account. And which is why if you pay an old collection, it can hurt your credit because the date of last activity is updated as today. And now that 3-year-old medical bill or whatever that's been on your credit that you just paid shows as a brand new activity date, a brand new negative account because you made a payment and updated. It's like ripping open a scar, right? It's been there, it healed for 3 years, and now you're going to rip at it. And that hurts your credit. And so the date of last activity is a legal term and a very important term for credit disputing. If that date ever changes, that is a big problem unless you've made a payment. And so the date of activity cannot change, but the date reported changes every month. Every month, a collection agency or a bank reports new information. And so Credit Karma reads that date of last reported and says, there's new reported information on your credit, which then you get an alert that says there's new negative info, and there's not new negative info. It's the same negative info that's been there. It was just updated, but not the date of last activity was updated. So it's a little confusing, and I might have lost some of you, and that's okay. But don't listen to Credit Karma, which was going to be one of my 3 tips. So you beat me to it.
That was kind of, so I'm going to jump in because I was asking because Credit Karma, speaking of which, has said that I have a old AT&T account like from 5 years ago, and they say I owe them $3,200, which I don't. But I've been trying to dispute it, and I disputed it once, and it said yes, that is your debt. I said, well, it's the wrong amount. And I just looked recently because I had been working with Hakeem just recently, and it says April 2020. There's no way it's impossible. So I said, well, this is making it worse, so I was just wondering, was it legal or was it, are they allowed to do this? I know they sell your account to different people, that kind of thing. So I thought that would have had happened, but I'm still like kind of angry with that.
So That is legal. So let's say, so you said AT&T. So there's a bunch of collectors that collect for AT&T. So Enhanced Recovery Company is one of those collectors. And after, let's say 6 months to a year, they give up and they say, hey, AT&T, we give up. I haven't made any money. I've lost money. I've paid employees to call her. I've paid the credit bureaus to report your information. We give up. We've lost money on this account. Take it back, AT&T. AT&T then hires a new collector called Credence Resource Management, and that company now reports on your credit report, and now that is a new collection, and that hurts your credit. So every time they change companies, and the reason why they change companies is because that does hurt your credit, because it's a brand new negative. It doesn't change the date of last activity, but it absolutely hurts your credit, and that is, they know that, and that's why they switch companies every 6 to 12 months to hurt you, to try to bully you into paying them. And if you don't agree with the amount, I mean, you're allowed to dispute it. You can send them a letter directly to the collector, certified mail, and say, hey, I don't owe this amount of money. Prove it to me. And if not, then I'm going to file complaints with the Consumer Financial Protection Bureau, the FTC. I'll talk to a lawyer, whatever may be involved. If you know for sure that you don't owe $3,200, and it's going to be hard for them to prove that you owe exactly $3,200. So you should write it. How old? You said it's pretty old?
It's like 5 years. It has to be about 5 years, maybe even older.
And they can only report for 7 years. 7 years, which is a long time. But if you're at 5 and they got 2 left and you start fighting it, they might go away.
Okay.
Dawn, I think we lost you. I'm sorry, you were talking.
No, I said, okay, thank you. I didn't want to take up too much time. Sorry.
All right. And so I just wanted to open up for questions. And while some other questions are popping up, Ramsey, give us your three tips. Give us 3 things that we can take away today that will help us to be better stewards of our credit.
Yeah. So these are all just recaps. This is what I've already talked about today. But tip number 1 would be to have or get a credit card and keep it super, super low, below 10% if you can, right? So if it's $1,000 limit, keep it below 100. If it's a $300 limit, keep it below 30. And yeah, I'm being a little harsh. Yeah, I'm telling you to barely use it. But for credit, when you want a mortgage, it's important to barely owe money to anybody, especially credit card companies. So that's the most important thing, is have a credit card, but barely use it. Number 2 would be to only pay a collection agency for 2 reasons. Okay. Number 1 is that Hakeem says you have to. If the mortgage company says that you have to, then guess what? You have to. And yes, it might hurt your scores and you might have to wait. But if it's going to affect your debt to income because it's over $1,000 and he says you have to pay it, then guess what? You got to pay it. Number 2 is the only reason you really should pay one is if they agree to delete it permanently from your credit. So if they agree, you call them and say, hey, MRS BPO, I'll pay you for this PICO bill, but you have to delete it from my credit. I'll pay you half, I'll pay you the full amount, whatever, which all collectors have different rules. They all have different policies. Some you need to pay the full amount. Some you need to ask, right? It can be that simple. We have people like Progressive Insurance, CCS, Credit Collection Services out of Massachusetts. If you call them and pay them for Progressive or Nationwide, they'll just report it as paid. But if you call them and tell them, I will only pay you if you delete it, they'll say, sure, we'll delete it. But you got to know to ask them. All right. So always ask and tell and demand a debt collector to delete it from your credit if you're going to pay it. And then tip 3 would be don't worry about Credit Karma scores. Like I said, you guys kind of beat me to that earlier, or any free scores. They are very inaccurate. They're a good tool. They're a good tool, right? You can have a hammer, but if you're using it as a screwdriver, it's not going to be a good tool, right? So, it's a good tool to have. It can tell you how much you owe on collections. It can tell you how much you owe on credit cards, and it updates every week. So if you pay Capital One down and 2 weeks later it shows that that is paid off or paid down, cool. That's great. Hakeem wants to know that info. But if it's saying that your score just dropped 50 points because there's been a new updated account that's been on your credit for 3 years, that's just trash. That's just their incorrect information. And so don't worry about Credit Karma scores or any free scores, because they're not the scores that mortgage companies use. So those are the 3 most important things to take away today for credit.
That's awesome, man. Awesome. Good stuff today, Ramsey. Thank you for all that information. Thank you, brother. I appreciate you, man. I am gonna take a second to acknowledge our realtor in the room, Angela Weber. Ange, I know you've been listening and taking notes. I wanted to know if you had anything to add. If you wanted to just drop your contact information too, that's cool. I'm going to give you the floor.
Hi, everyone. Thanks for having me here again, Hakeem. I appreciate it. I think your credit is super, super important when you're buying a home, and especially now more than ever, especially if you were planning to start the process during COVID. Hakeem can probably attest to, like, the credit scores have changed a little bit for the minimum requirements. So it's super important now more than ever to be on top of your credit. The market that we're currently in, you need to be at the tip top of your game as far as you as the buyer. You have to have everything lined up. If you're getting a grant, you need to have that in order. If you can not get seller's assist, which is something that maybe Hakeem will cover on another class. But if you have, like, savings, your own savings, that's key. Save your money, get your credit scores up, and just get in tip-top shape. That's it.
And there you have it from Angela Weber, right? No, but Angela, you are spot on. The game has changed quite a bit because of COVID. We have, however, started to relax our guidelines and get back to some sort of normalcy. Not all the grant programs are available at this point in time. We're getting back to some rolling themselves back out, and we'll talk about those on another course. It's tough. Our minimum credit score has gone back down to 600, where some lenders are still at 660, still at 640. And so it's going to be a long recovery road when getting back to what we knew as normal. But it doesn't mean you have to wait, because honestly, some of the best properties that I've seen in a long time are hitting the market right now. And Angela can attest. We see it every day, and we see how quickly they go. How these highly sought after properties come on the market, and they're going. So I want to say thank you to all of the attendees. And then I want to also, I see we have one more question. I want to get this question answered. I want to try and keep these to under an hour, so I respect your time. But if there's any last questions, please drop them now. I'm going to get Angela's question answered now. Ramsey.
Yep.
If you have zero credit, how long will it take to obtain positive credit for a mortgage?
Yeah, sure. So I may have slipped this in earlier, but I do talk a little fast sometimes. So 6 months. If you have zero credit, nothing, no credit cards, no student loans, no personal loans, no car loans, it will take 6 months to generate a FICO mortgage industry score. And so earlier I may have said Credit Karma gives you a score the day you set up an account. I don't even know if they have a no score with Credit Karma. Maybe if you have nothing good and nothing bad. But even with something bad on Credit Karma, you get a score. Even with the collection, you get a score. But with FICO mortgage scores, which is all that matters when you're getting a mortgage, no other scores matter except the mortgage scores. It takes 6 months to generate a FICO mortgage score. So that means you have to have a credit card open for 6 months to have a mortgage score. You can't just open one today and apply tomorrow. You can, and Hakeem's going to say you got a 0 or a no score. It's not really a 0, but we say that. Was there something else? Angela? Oh, wait, let's see. One more.
No, I think that's it, Rams.
Okay, got it. I thought she said one more.
Ramsey, listen, I know you offer a free consultation for all your initial calls.
Yep.
Please verbally say it and give the people, type it out here in the chat box, verbally say how people can contact you and how they can reach you.
Sure. Yeah. So it's always a free consultation. You can call us at 610-350-4683. Again, 610-350-4683 for a free credit consultation. You can look us up on Facebook or Instagram. I think it's just the @ Coulter Credit, which is COULTER Credit, Coulter Credit LLC. You can send us a message. There, I just posted the number. I'll type a little bit. Oh no, I sent this privately. I need to fix that. Sorry. Trying to multitask here. There we go, to everyone. All right. I'm typing it right now.
While you type that out, Angela, I want you to also say it verbally so people can hear it.
What was that, Hakeem?
I also want you to tell the people how to contact you.
Oh, okay. I put it in the chat box what my phone number is. It's 267-975-1905. Or you can email me at angelaweber@kw.com. If you're on social media like Instagram, I'm on Instagram a lot. My handle on Instagram is The Friendly Realtor. I give a lot of tips and advice there. And feel free to reach out to me with questions.
There you have it, guys. You all know how to contact me. So Hakeem at singletonmortgage.com. You can call me myself, 267-337-3157. During the day, you will get to talk to the lovely Hannah Keogh. She is our front line and our director of customer first touch. So she makes everyone feel warm and fuzzy, right? And so if you call the office, Hannah, we make sure we don't miss calls. I take the calls at night. So thank you so much, everyone, for coming, for spending your hour with us. Angela, Ramsey, big shout to you guys. We appreciate you. And I'm looking forward to our next class on budgeting, financial consulting. We have a guest, Danica Reinhardt from Edward Jones. Danica is going to go over budgeting. She's going to go over how to build a healthy savings without overextending yourself, without putting yourself in a situation where you're not paying your bills to build your savings account. We're going to do that with some flair. You're going to learn that living within your means is meaningful and it is fruitful, and that you will be able to still live the life that you intended for yourself and your family. So thank you so much, guys. I look forward to seeing you. I believe that date is July 8th. It is July 8th. And we haven't said it yet, but it's definitely July 8th. So thank you so much for jumping in with us tonight. Have an awesome day. Have a great night. And I'll see you soon. Thanks, guys.
See ya.
Thank you.
Thank you.
Thank you, Najee. Thank you, Dawn. Thank you, guys.
Thank you.
Take care, guys. Good night.
Good night.
Bye.